Good afternoon. This is Craig Modelmog for the last episode of 2020 Wall Street X's and O's. So welcome. I hope everyone's doing good. It's hard to believe it's already the last day of the year. It's crazy. Today I've got a great show for you. I've just got some good hard details, obviously hitting on unemployment, but looking at the macroeconomic impact and really what I'm looking at, what's driving our positioning as we look into next year. I also have just some economic commentary. Again, really looking at what's going on, really looking at the data. As you all know, those of you that are joining for the first time, if there are any, hopefully there are at least a couple, you do know that this is uncut and unedited. I do this in one shot and I have a lot of fun with it. Sometimes it's really terrible and it's kind of like, it is what it is. Thankfully, all of you cut me a lot of grace and slack, and I appreciate that. But you know what? It's something where we're really trying to inform and educate and help people understand from a process standpoint, how when you allow data to drive your process, so when I say data, I mean macroeconomic data, it really helps reshape what you look at. And that's really what, like I said, I want to hit on. But before I get going here, I'm going to hit the standard disclaimer. Obviously, the opinions and information on this show are mine. Nothing on this is a solicitation or to buy or sell anything. Investments can and will lose money, and they are not FDIC insured. So without further ado, let's get this thing cranking here today. First of all, some general housekeeping. CARES Act really comes to a close, or I should say a lot of the programs affiliated with the CARES Act end today, or even some yesterday. Another thing, RMDs are coming back for 2021. So for those of you that were able to opt out of their RMD, that being a required minimum distribution, for 2021, if you were born anytime in 1949 or earlier, you are required to take one. Now, could they suspend that again? It is possible, but you need to go into the year thinking and planning that you are taking a required minimum distribution. So all of the gifting, for those of you, you know, we do a lot of gifting out of our IRAs, which is a real nice strategy to do if you really don't want to take it nor need to take it. It's a real great way to be philanthropic. So that is coming back into play. Tax brackets, let's move on to that, are going up again. Don't be alarmed, they go up every year. Okay, I'm not going to bore you with the specifics, but each bracket income amounts go up annually. So I would encourage you to hop on the IRS website and check that out, particularly if you're close to one of those different brackets. That's always something to be cognizant of where you are at. And that can impact a lot of different things, whether you're contributing to your 401k, whether it's pre-tax, post-tax, still putting money into an IRA, a Roth, etc. It's always kind of good to know where you're going to land or where you anticipate landing. Standard deductions also go up this year. If you are single, filing a single return, yours goes up $200 to $12,400 for the year. If you are married, filing a joint return, yours increases $400 to $24,800. So what that means is if you don't itemize and all of your itemized deductions are above those numbers, it really doesn't pay you to itemize. So you get that standard deduction, which actually is a very, very nice benefit. So keep that in mind. HSA limits are also increasing. If you are a single person, yours goes up by $50 to $3,550 for the year in 2021. If you are married and yours goes up for your family, $100 to $7,100. So, and to close this section out, congratulations to my buddy Jim. Dude, you made it to your retirement. Blessings to you and your bride Susan for a fantastic next chapter. I'm proud of you guys and super excited to see what is in front of you. Let's get this thing cranking here. Unemployment numbers, and you know I hit on that a lot, but I'm going to start this out with a quote from Harry David Thoreau, and I probably pronounced that, as you know, many days. I am challenged with the American language, or the English language. See, I call it the American language. See, it is what it is. I'm just telling you. Anyway, Henry David Thoreau says it's not what you look at that matters, it's what you see. Ooh, that's a deep one for the last day of the year. So as we move on here and look at unemployment, claims were down by 19,000 to 787,000 as far as new claims. Total unemployment dropped 800,000, but that number is still at 19,564,000 and change. So still virtually 20 million people on some form of unemployment benefit. So with the government finally getting their act together, with Trump saying he wasn't going to sign it and then he did you ever think he wasn't? I mean, seriously, you know, the dude is not as ridiculously stupid as a lot of you think. And I told you they would get a deal done, and I was right. Now, I'm also going to tell you that it will not shock me if Biden does another deal. Okay, because again, he wants to get off on the good foot, and what's a better way to get off on the good foot to then just give people free cash, you know, for those that qualify. But anyway, let's look at this new stimulus bill. It was a $900 billion deal, which, to put that in context, our debt to GDP now is at 102%. Some of you are probably freaking out and thinking the world is going to end. I'm telling you it's not. Japan's is north of 200. Parts of Europe are well over 100, closer to 200. So this really, is it a big deal long term? It is, or could become one. But for now, I'm really not super concerned. But it is kind of troubling just to see how we've seen a shift in fiscal responsibility, party agnostic, both parties contributing to this fiscal irresponsibility, as I call it, where they just spend and spend and spend, and they really don't care how they're going to pay for it. If you look at it, we've added $3.1 trillion in debt in two deals. We had the CARES Act, and then we had the deal that just got closed. Okay, that brings our total outstanding debt as a country to $21 trillion with a capital T. And that is not it could be a technical foul. I would tee them up. I will tee the government up for their irresponsibleness when it comes to fiscal responsibility, which that didn't make a whole lot of sense, but I'm going to still tee you up. If I had a whistle, I'd blow the whistle. Okay, what it means, everyone's going to get $600, okay, if you are eligible. This also includes children who are eligible. So if you are married, you and your spouse each get $600, and if you have two children, younger children, I think it's below, I think 18, I don't even know. I'm not going to say what the age is, but anyway, you could get up to $2,400 on that deal. All right, it's based on your 2019 tax base, and there's a phase out. The phase out starts if you're an individual filing taxes. If your income is greater than 75,000, there's a phase out up to 87,000 in which you get nothing. So if you made 75K and below, you're guaranteed to get the full $600. If you are married filing jointly, that threshold jumps up to 150,000. So anybody filing a joint tax return that makes $150,000 or less in 2019, you also will get the $600 gig. That phases out again at 174,000. So anything above 174, you get goose egg. If you were a single person, anything above 87,000, another goose egg. All right. Let's move on to the unemployment benefits, which, if you remember a couple of weeks ago, I said as they were starting to hash this deal out, I was very dialed into how they were going to handle unemployment benefits, because to me, that is the key. All right. If there's anything that gets me excited about this deal, giving everyone $600 below a certain threshold, sure, Merry Christmas, okay? I'm more focused on the people that need it, and those are the people that are out of a job. As I said at the beginning of this show, almost 20 million people are still on some form of unemployment benefit, okay? Here's what they're doing. They are extending the benefits by $300 a week. So traditional benefits are $350 per week. They last 29 weeks. And then if you look at the pandemic unemployment, went another 39. Well, all these are coming to a close or have come to a close. So essentially, you're going to see 11 more weeks of enhanced benefits of an additional $300 per week. All right. Here's what this is focused on. Again, it's not what you look at that matters. It's what do you see. Some people look at that and go, oh, that's fine. Here's what I see. I see this being a very positive impact from an economic standpoint, that we will most likely see the impact or the actual physical data reflected in Q1 and Q2 of 2021. Oh yeah, oh yeah, it's coming. I'm thinking this. I've been posturing this for weeks, and we're very prepared for this. I like how we're sitting moving into 2021. Okay, so we're going to have 11 more weeks of these additional benefits, and if Biden does another deal, that's going to extend the benefit period. Okay, which is really going to soften this financial blow because we were starting to see the data reflect the slowdown in people dropping out of the unemployment system. And what that means is it starts to constrict spending, and you start to see that in certain parts of the economy. Okay, so that's really what I'm seeing, not what I'm looking at, it's what I am seeing. Okay, moving on here. If you look at from an economic standpoint, as we head into 2021, I don't see anything changing. I see economic growth beginning to accelerate and now having some fuel to continue that acceleration. And I also see inflation continuing to go up. That is called a reflationary type of environment in which you want to be long stocks. You're going to be rewarded for owning stocks right now. I've had numerous discussions with people saying, Craig, the market's overvalued. The markets are overextended. We're due for a pullback. If you look at Wall Street right now, to be very candid with you all, right now, Wall Street is positioned for a winter COVID bear market. How do I know that? If I look at the CFTC, this is a report that comes out every week on I think it's a Thursday afternoon or Friday morning, and it shows all the institutions and the hedge funds on how they're positioning. Right now, the position, you're seeing a lot of defensive positioning, meaning when you look at the options market, okay, a lot of big money, institutions, hedge funds, etc., will hedge portfolios by buying puts in the option markets as protections, like an insurance policy. Right now, they are net short the S&P 500. Okay. When I look at the implied volatility of all the different indexes, that's the volatility of volatility. Right now, they're hedged across the board. So I see Wall Street planning for this COVID bear. What the data reflects is a continued acceleration of growth and a continued acceleration of inflation, which means they have missed out on the last quarter because they've been talking about this. Oh, it's time to rotate. We're going to shift and buy more value. We're going to buy more dividend stocks. Those have been terrible. We're going to buy more bonds. Bonds have been terrible. We're going to hold gold. Gold has been terrible. So here is the thing. Again, getting back to what do we see? When I look at from a macroeconomic standpoint, and I've had a few questions saying, Craig, when you say macroeconomics, what does it mean? It means that's kind of a study of the overall economy, the markets, the systems that operate on a very large scale and how it behaves. Okay, it really focuses on inflation. It focuses on price levels. It focuses on economic growth. It focuses on national income. It focuses on gross domestic product or GDP. And then it focuses on changes in unemployment. I focus then on the rates of these change. How quickly are these changes accelerating? How quickly are they decelerating? So when I talk global macroeconomic data, that is what is driving my decision making. Now, I'm not going to lie. Back in March, April, I got hung up on the COVID bear. I will be the first to admit that. I had one person fire me this year because of that. Sadly, they made a very poor decision because their account would have been up and been looking very good at this point in time. It happens, okay? It happens. Am I hurt? No. Do I think it was stupid? Yeah, incredibly. But you know what? Stupid is as stupid does. So anyway, here's the deal. March, April, I got hung up, took my eye off the ball, took my eye off the data. That is my fault. Since then, eye on the ball, executing on a daily basis, performance significantly outperforming our benchmark, significantly higher risk versus reward, or lower risk versus reward. We're doing the things that we want to do. We're doing the things that we need to see on a continual basis in order to continue to perform and be rewarded when markets are going to reward us, but then also protect and shift when markets are beginning to change. So there's a predictive component also in global macroeconomics, where you're looking at the data, which helps you then somewhat predict, and from a probability standpoint, which it's all math. It's nothing fake. It's not what does Craig feel today. It's all mathematical generated probability, which for those of you, if you tuned out when I said math, I'm sorry. If you tuned out when I said stats, I'm sorry. Here's the cool thing. The numbers do not lie, okay? So I focus on the data. I focus on the math, and that's what I'm going to continue to focus on. Okay, and I'm excited. I feel we're positioned very well, and I think that the market right now has it wrong. Time will tell, as anything, but this deal was the first step in the right direction, and I'm really excited to see what continues to happen from that. Okay, so we're going to wrap things up here, but before I get started with my year-end toast, a little Colorado champagne powder. Isn't that cool? When you can kind of create and do your own videos, you can do stupid stuff like this. By the way, I've been up skiing 4 times. The snow, all things considered, is good, not fantastic. We need a dump. We need to pray for a dump of snow so we can get Panoramic opened up on Mary Jane. Too many people from out of state and rookie skiers on Mary Jane in Winter Park. I don't like that. I try to run over them. I try not to run over them, actually. But anyway, I digress. So anyway, we're going to get this going. I don't have any booze in this. This is water. This is my Jayhawk cup. Rock Chalk. We are ranked number 3, and Baylor and oh man, I forgot that team that's number 1. Mark, if you're watching this, that was for you, dude. That was a jab. That was a jab on the Zags, and it's okay. Here's the deal: as I toast the year, first of all, I would like to toast all of those who are not with us anymore, okay? My hope is that we will always remember their smile. My hope is that we will always not forget the sound of their voice, and that we'll remember the great times that we got to spend with them and enjoy the wonderful times with them, and that are so near and dear to our hearts, okay? I would also like to toast those that are still around. My hope is that we approach people with more grace. I hope that we would approach people, that we would be better listeners instead of flapping our gums. I pray we would be more accepting of other people's opinions, okay? And that we would really cherish the moments we get with people and focus on the little things, because the little things is really what matters. Okay. I would also like to toast 2020 as it goes out the door. This will always be remembered as the year of the first modern day global pandemic. Okay. It's a big deal. I hope that we look back and we learn from these times. I always tell my kids when they go through some things, what'd you learn? That's something I always look at. When I look back, again, I was talking to March and April how I was an idiot and made some bad decisions based on emotions. My hope is that we don't allow our emotions become our reality, and that we would look at things for what they are, that we would look at the positives, and we would choose to be positive. That's what I hope. And as I toast 2021, as we're getting ready to enter a new chapter, I hope we approach it with a little more, that we're more resolute. I hope we've toughened up a little bit, and that we've learned that we can go through challenging times, that we can learn from them, and we can become better people, because without those times, we cannot become the people that we have the capability of becoming. Okay? So anyway, I'm going to close out here. I only wanted to go like 15 minutes today. I'm already at 18:54. But anyway, I love you guys. I love seeing you guys every week. This is a great way to communicate with you all. I appreciate your time. For those of you that are clients of Cornerstone Wealth Management and Tanya and I, we thank you for giving us the honor to serve you. We are humbled that you entrust us with such an important part of your lives. And we show up every day and we work our butts off for you. And I hope that you see that by our actions, and that how hard we're trying to work for you and really doing the right thing. So as I close this out, this is for December 3rd. See, I had to look at the date, like I should not know the date. This is December 31st, 2020, on New Year's Eve, On behalf of Craig Modelmog and Tanya Modelmog and family, we love you guys. Thank you for being part of our lives. Thank you for letting us be part of yours. And I am out.